Hello, Finxters, and welcome to part 3 of our Forex Trading with Bots and Python series. In this lesson, we're going to review a little bit and get started with pivot point theory, an indicator that you can use to get started as part of your long-term trading strategy. The things we're going to cover are pretty straightforward. The tools you're going to be using for pivot points. My first Python code for Forex, which was calculating the pivot points, and we'll get into that a little bit. What pivot points are, and then we'll move to the charts, and we'll put the pivots on the charts, and we'll do some analysis. Since we're going to be on the charts again, we'll have to go through our disclaimer here and take a minute to read that, if you will, please, and then we'll get right to the charts. All right, so as we've talked before, I have opened my Anaconda Navigator. We've talked about Anaconda, and I launched a Jupyter notebook here, and this is the first Python code I ever wrote. I'd been studying and learning Python for a couple of weeks, and I realized that I could cut out some time calculating these things by writing some code. And so let's get right into that. What I've done in the first cell here is just set up my variables. Pivot points are calculated on the high, the low, and the close. Okay, so what I've done is I've updated this for the Euro USD for 21 and 22. That's what we're going to be working on with the charts. And so I've got the three numbers, the high, the low, and the close price already entered. So let's run that cell. All right. Now there's no output because we haven't calculated anything yet. We're just getting this set. Now when I want to go back, I could change the pair, make a note of that, and change the prices. And it just takes a second, and then I can do any pair any currency pair that I want to work with. Okay, so now let's drop down here. The central pivot point is what all the other pivots are calculated off of. So to calculate that, we add the high, the low, and the close, and then divide that by 3. That gives us basically a weighted average. So let's run that. And there's our output, 1.1636 forever. We're only going to use 4. Okay, so it would be 1.1636 is our price for our central pivot point, right? Then we need the range. And the range is just simply the high minus the low, right? So let's run that one. And our range is 0.11609999. So that is going to be 1,161 pips. We'll round that up. Okay, so 0.1161 is 1,161 pip range for the year of 2021 on the Euro USD. Okay, now that we have that, we'll go to our 2 support pivots, support 1 and support 2. Now there are more of those, and we'll see that when we get to the charts, but these are the only 2 that I really use, and I'll show you why when we're on the charts. So support 1 is 2 times the central pivot point minus the high. Okay, and hopefully you're getting a little review of your Python math operators here with the multiplication and division here. Okay, so we're going to run that. And there's our S1 price. Now S2 is calculated by taking the central pivot point minus the range. That's why we calculated the range. So let's run that. And there's our price. And now our resistance levels are basically very similar. 2 times the central minus the low here instead of the high. Okay, do that. And then R2, resistance 2, central pivot plus the range. Okay, and we'll run that. All right, so now we've got all our prices here. Okay, and then we can take those to the charts and mark them on the chart, and we'll go there next. All right, so let's jump over to our charts and see what we've got. I've marked a few things here since our last lesson. One of the things I want to talk about, we were discussing checking out this broker together because I haven't used him before, and what I found is that their pivot indicator, you find your indicators here, and the pivot point indicator is actually a decent one. If you can see here, right where the central pivot is, this is between these two blue lines here is 2021 that I've marked. So you've got January 21 to December 21. Then I've excluded these outside candles with these vertical lines. And you can see that their pivot, where I marked the central pivot, this black line is a line, a horizontal line that I put on for my central pivot, and it's exactly the same. So that's kind of interesting, might be a tool you could use. You can also see that it marks the other R3, R4, R5. Okay, so what I'm going to do to save time is I'm going to take my lines and I'm going to put them right on their pivot lines. So that's S2. We'll put in S1. And then R1, and you can see the reason I do it my way is because it's very visual. I like to be able to see things just at a glance and see where things are at. Whoop, let's try that again. And you can see that all the functionality these charts have. It's pretty amazing. All right, and so we're zoomed in pretty good here. This is a monthly chart. And one good thing as well that we have going for us, we've calculated off of 2021, and we're halfway through 2022 here, so we can kind of get an idea whether or not the Euro USD is reacting to these pivot points. That's a big thing. You can put pivots on a chart all day, but if that particular pair is not using the pivots, it's not reacting to them, it's just they're useless. Okay, the pivots work if the market participants are using them. So let's take a look. You can see here at S2, right on the pivot, there was a bounce. Okay, so from here, let's go to here, 108, basically from 104, it's a 350 pip opportunity directly off the support pivot. Okay, one other thing we want to talk about here briefly are the M points. Halfway in between each of these pivots, okay, you can kind of eyeball them. Halfway in between are what's called M lines. They're the midpoint between these pivots, and they're also something that some traders use as actually, let's see, M1, 2, M2 in between the central and S1 would be M2. We're going to go 1, 2, 3, 4 in this case, and that M2 is for a lot of traders is a buy area. Okay, now that may be different than what you hear online. If we're below the central, we're bearish. We're above the central, we're bullish. But a lot of people who are very good traders will use that M2 as a buy area. Okay, so just something to keep in mind as far as M lines. I'm not going to mark them out here. This chart is already getting a little cluttered. Um, and what we could do, let's try this. See if we can remove that. We'll get that out of clean. I like to keep the charts pretty clean. We don't want to get it too cluttered and have too much on there. So, okay. So here's our pivots for 2022 on the Euro USD. Okay, we're here on a monthly. We're zoomed in pretty close on that monthly so we can see the price action. And we do see that around this S2 area here is, prices wanting to bounce. Okay. So one of the things that I'll say here that I've seen this happen many, many times. I watched a very good trader try to work a bottom like this. And let's just see if this is an actual. Yeah, so see where we're at here. We've got bottom, 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 okay, close, and then the bottom. And I marked that before with this thin blue line. I've marked some areas of interest with those thin blue lines here before. Um, and a lot of traders are going to set up a strategy to say, hey, we get to this bottom again. This is historical support. And I'm going to, have a strategy that when it gets down there, I'm going to buy this thing. I mean, every time it gets down there since it's been down there, it goes back up. And that's legitimate. But let's take a look here what happens. And like I said, I've seen this one specific trader that he just got wiped out for over a long period of time trying to do this. And what you have here, you've got, pardon me, you've got this bounce. Okay, comes back again. Now, if you're trading right here on that bottom, if you're buying, let's see, we've got 104.50 ish, 103. It's like 250 point spike down, and then it comes back up, and then it does it again. So what happens is people that are trying to buy this bottom, if they have stop losses at whatever 50 pips or 100 pips, it looks good. It spikes down, takes them out, and then goes back up. Spikes down, takes them out, goes back up. Now, what happened in the other case with, I believe it was Australian dollar, New Zealand dollar, it took it quite a long time, and then it finally did make its way back up to some higher prices. But in the meantime, uh, you know, probably 30 trades didn't work using that system. So be careful when you're looking at that kind of a thing. And what so just be careful with these so-called tops or bottoms because they can be dangerous. Uh, One of the things I'm going to say something a little controversial here, um, but with my robot, I don't use a stop loss. And a lot of people just say that that's just crazy. And this is where having the proper trade size comes in. On these trades, if you had a bot set without a stop loss that would take a trade here, and you have the proper trade size, so when it made this move, it didn't wipe out your account. As a matter of fact, if you had $1,000 account using your smallest trade size, which is 10 cents a pip, you're talking about $25. It's a very, very small part of your margin. And what also would happen here, if your robot took a trade in here, a buy, this spikes down. When it comes back up here, you're getting a profit. Same thing here. It comes down. It's not nearly, what percentage of your account? What if it was $100? That's only 10% of your account. You're still good to go. It comes back up. You're going to get a profit when it moves back up here. So keep that in mind. And like I said, I know it's controversial to say not to use a stop loss, but my best strategy does not. And I'm not recommending that for you. You figure it out. Um, I just want to put that in there because I have seen so many people get damaged hard on these types of things over the years. So just keep that in mind and you know, make your choice. One other chart tip that I'll give you, I talked about the M lines, and let's see what we've got over here with, okay, we're going to look for a Fibonacci retracement. Let's grab that. And when I mark my M lines, one of the things I just grab a Fibonacci real quick, and I can start it here and go to here. We should have a 50. Okay, so if I put it right there, let's see, put it right on that other line. Okay, and now right here you see that we've got a 50% fib retracement, and you can see that. Let's see, it must be here, right here. Okay, and so you can see that that's right in the middle of the R1 and the R2. So you could put another thin line, you know, maybe even let's take this one if we can. And we'll go right there. Okay. And you can see, then let's go ahead and take this fib out of our way. And you can see that we've got that M line. And then you can just do that here, 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 and here, and real quickly have a really good visual where your M lines are as well. Okay, so just another little chart tip, and you can get those around all your charts. So just something to think about if you want to get those M lines in there as well. So to sum it up for this lesson, let's cover a few things. Remember that, and this is my own wording here, but pivot points are areas of interest. The fact that this bounced here, that's great, but all I want to do is I want to be concerned or interested in those areas as a potential place to trade, not just, oh, it's there, I'll trade it. It gives me an idea of how I want to set my bot, whether it be to go long or to go short. And we can look at some other indicators next time and other strategy ideas. The bottom line here is this a good place to buy? Yeah. I mean, nobody's going to fault you for that. But the question you want to ask is the euro going to strengthen against the US dollar? This can certainly go down further. That's just not, you know, out of the realm of possibility. So you have to have some ideas outside of just the pivots on what's going to happen. One way to do that is on smaller time frame price action, central bank policy. What you have to develop an opinion, a bias, if you will, on if this is going to go up or not just that it's at this support pivot and this historical support here. So keep that in mind. Keep working on it. I hope this helped you get an idea of pivot points, and I will see you in the next lesson.